So you're launching a startup. It's this incredible, chaotic, amazing journey, right? You're building, you're creating, you're chasing this huge vision. But let's talk about the one thing that can stop all of that dead in its tracks: your finances. I know, it feels like a chore, but what if I told you we could flip that script? What if we could turn it into your single biggest strategic advantage? Let's get into it.
We have to start right here. This number from CB Insights, it's a gut punch. A full 38% of startups don't fail because the idea was bad or the team wasn't good. They fail for one simple reason: they run out of cash. This tells you right off the bat that handling your money isn't just some admin task. It is literally a survival skill.
So, why on earth does this happen so often? Well, it's something I like to call the startup money trap. In those early days, you're 100% focused on the product, on marketing, on getting those first few customers in the door. And your finances? Yeah, those tend to get shoved to the back of the line.
And look, I totally get it. It is so easy to just throw everything in a spreadsheet and tell yourself, I'll figure it out later, when things calm down. But trust me on this, that mindset is exactly where all the trouble starts. Later has a funny way of showing up at the worst possible moment with a very, very high price tag. And what does that price tag look like? It's not pretty. We're talking missed tax deadlines, which means penalties. We're talking about flying blind with your cash flow, which leads to terrible decisions. And maybe the most painful of all, walking into an investor meeting and completely losing all credibility because your numbers are a mess. This isn't just disorganized. It's a direct threat to your startup's future. All right, so how do we fix this mess? It really starts with getting one thing crystal clear. So many founders use the words bookkeeping and accounting like they're the same thing. They are not. And honestly, understanding the difference is the very first step to building a rock-solid financial foundation. Okay, let's make this super simple. Think of bookkeeping as your company's financial historian. Its job is to meticulously record every single transaction, every dollar in, every dollar out. It's all about keeping things organized. Accounting, on the other hand, is your financial strategist. It takes all that data, analyzes it, and tells you what it means. It helps you see the future, make big decisions, and tell the story of your business. You absolutely positively need both. So you need both of these things, but let's be real. As a founder, your time is your most valuable asset. You don't have time to be a historian and a strategist. And this is where outsourcing becomes a total game changer. This isn't just about avoiding trouble with the IRS. This is a proactive, strategic decision to fuel your growth. So what do you really get out of this? Well, you're not just hiring someone to do paperwork. You are buying back your own time to actually build the business. You're guaranteeing you're compliant, you're getting crucial insights from your numbers, you're getting financials that are ready to show an investor at a moment's notice, and you finally get to control your costs. And honestly, you get some peace of mind, knowing that your financial house is in order. Okay, I know what you're thinking. This is usually the point where founders go, this sounds great and all, but when do I actually need to do this? Am I too small? Is it too early? That is an excellent question, probably the most common one I hear. So let's just tackle it head on.
So what is the magic moment? Is it day one? Is it when you hit your first million in revenue? The real answer is, it's probably a lot earlier than you think. And thankfully, there are some really clear signs that tell you your DIY spreadsheet just isn't going to cut it anymore.
Here they are. These are the big triggers. If any of these sound like your startup, it's time. The second you're making consistent money or have to pay even one freelancer, the complexity just skyrockets. And here's the big one. If you are even thinking about raising money from investors, you needed professional help like yesterday. Starting early saves you a massive, expensive cleanup job down the road. Now, the next question is usually, okay, so should I hire someone full-time or should I outsource? For pretty much any early-stage startup, the math here is a no-brainer. A full-time accountant is going to run you over $70,000 a year. An outsourced service gives you access to that exact same expertise, but in a flexible model that actually fits a startup's budget. It's just the smarter, more capital-efficient way to go. So what does affordable actually mean in real dollars? Well, it grows with you. To start, just for the basic essential bookkeeping, getting all your transactions organized, you're typically looking at a really manageable monthly cost in this range. This just gets your house in order. Then, as you start to grow and you need more strategic help, like getting real financial statements or help with tax planning, the service and the cost just scale right alongside you. This is where you move from just organizing the past to actually planning for the future. And then, for startups that are getting close to a big funding round or are dealing with really complex growth, you can even tap into outsourced CFO services. This is like having a top-tier strategic executive in your corner for those critical moments, all without that six-figure salary. All right, let's bring this all home. We started out talking about accounting like it's this annoying chore, but I hope you're starting to see it differently now. This isn't about playing defense and just avoiding mistakes. It's about playing offense. It's about turning your financial data into your most powerful weapon for building a business that lasts.
At the end of the day, this quote says it all. Your passion and your big idea might get you a meeting, but it's the clean, clear, professional financials that are going to get you the check. It's the ultimate proof that you're not just a dreamer, you're a credible operator who can be trusted with their money.
So I'm going to leave you with this one last question. I want you to take a really honest look at how you're handling your finances right now. Is your company's foundation built on a shaky pile of spreadsheets and pure guesswork, or is it built for stability, for clarity, and for intentional growth? Because the choice you make there, well, that's going to define everything.